To order, can we get roll call, please?
Commissioner Blackman. Commissioner Huff,
Here.
Commissioner Monty. Commissioner Orman. Commissioner Powell,
Present.
Commissioner Reddick,
Here.
Commissioner Scott.
Here.
We have quorum.
Have a quorum, good.
Alrighty.
Do we have anybody scheduled today, Tiffany, for public comments?
We do not.
Okay. Staff comments?
I have, well, two, as an introduction, I would like to, welcome, Alderman Prill. We're excited to have him here with us and we look forward to working with him. And then we also have, Miss Patrice McCoy Bowman. She's the new, Director for Redevelopment Services.
Awesome. Welcome.
So we like to welcome her as well. If Mr. Prill would like to say anything and let Ms. Patrice say something if she like.
Just here to listen.
All right, thank you. All right, Ms. Patrice, you got anything you want to?
Yes, I want to thank you so much for allowing me to come today. I kind of hit the ground running. I started September 1st.
Okay.
And I want to partner with all of you. So when you have an opportunity, I just want you to give me a call. I don't have any cards yet, but just tell me what redevelopment means to you. I'm putting together some talking points. I'm being prepared to go out into the community. We have a strategic plan meeting in the next couple of weeks. So I really want to hear from you. So if you just call over to the development department, which is, my name again is Teresa Bowman. So call me. And again, I'm looking forward to hearing your thoughts and your part so we could better our partnership.
Okay.
Thank you.
Thank you.
Anybody else in the comments? At this time, let's take a look at the minutes. If there's anything, you probably have already, but.
I make a motion to accept the minutes. Second.
Second, all in favor of approve the minutes as published, please indicate by saying aye.
Aye.
All opposed, like sign. Minutes approved. Finance report.
Tonight, we had presented to you the finance report for July. And as you all know, we are in a little transition right now in our finance department. These numbers are at the end of July and we still have a few numbers to post to it. So it's going to change a little bit. You all have it for your review, but we're not going to go over it in detail tonight because we did go over it with the finance committee because we do have our audit presentation. So with that being said, it's for you all to review and please know that it may be some small changes to that and we're going to bring it back to you next month. So I don't want to keep us here too long because we do have our audit presentation and we have Mr. Alan Kitchen on with Zoom and also Sierra, please forgive me because I don't want to mess up your last name. And they're with Rubino, our auditors, and they're gonna present to you our financial audit for the agency.
Okay. Give a motion to accept the finance report as shared. Oh, you hadn't looked at it, had you? Okay, I'm sorry.
No, you're fine.
Okay, yeah. I know we had a meeting, but yeah.
It was sent out in the board packet last week.
I saw it. I was just giving someone else a chance to make a motion, but I'm happy to make a motion.
I make a motion that we accept the finance report as presented.
Second?
And I'll second.
Okay, good, thank you. All in favor of approving the finance report as published, please indicate by saying aye.
Aye.
All opposed, like sign. Okay, so that's time we had a presentation of the annual audit.
Yes, sir. I will turn it over to you, Mr. Kitchen.
Okay, thank you. Hi, my name's Alan Kitchen with Rubino and Company. And Kira Gagliano is on the phone or the Zoom with us. And this is our first year of doing your audit. Ideally, we would have liked to finish it up sooner than this because we're running up to the end of the month here. But you should have a draft of the financial statements in the audit report in front of you. One thing you'll notice that's different is the formatting and the wording of the audit reports are different this year than you've seen in the past. There was a new audit standard that became effective this year that changed the reports. This would still be considered an unmodified, a clean opinion, unqualified, I guess, depending on what kind of terminology you want to use. I guess the correct terminology is unmodified with an unqualified opinion. If we were to scroll to the audit report, I can point out a couple of the differences in the way it's laid out. You know, in the past, it was kind of laid out in I guess you would call it chronological order, where it would say, we were hired to do an audit. This is what an audit is. Here's our opinion. Well, the new format, it basically starts off, here's our opinion, and then describes what an audit is. So you see right at the front, the first thing it talks about is our opinion. And our opinion on the financial statements is that they're fairly presented. This would be what would be called an unqualified opinion. It's the highest level of opinion that we can give. And then it gives some background as to, you know, why is that our opinion? And basically it's our opinion because we did an audit and we followed generally accepted auditing standards. And because you have some federal funding, there was government auditing standards that are involved. And there's not a whole lot of difference between regular audit standards and government auditing standards. The primary difference is that the auditors have to have additional annual CPE geared towards government auditing. And we have a report on internal control and compliance that we have to include in the report under government auditing standards. Other than that, the government auditing standards basically incorporates all the regular audit standards. And then it's not mentioned in the audit report here, but later you see that there's also an opinion under the Single Audit Act or Uniform Guidance. And we can talk about that when we get to it. But so we have 3 different levels of auditing standards that are involved here. And then there's more descriptive information that the new audit reports are required to include to provide additional, I guess, background and information to users. You know, the idea, they've been trying for the last 20 years or so to make the audit reports more, I don't know if it's user-friendly, but more informative. I think that they're probably less user-friendly than they used to be, but they are more informative. When I got out of college, an audit report was 2 paragraphs. So that was pretty simple and straightforward. But this has definitely got a lot more information as to what an audit is and why we come up with our opinion. And then here it talks about the last paragraph in the audit report refers to the separate report that's on internal control and compliance under government auditing standards. And then, so the financial statements are, pretty typical. You've got your assets, you've got sizable amount of cash, you've got fixed assets, and then under one of the new accounting standards that was implemented a couple of years ago by you guys, on the capital leases, you record an asset for the capital lease receivable, and then there's an offsetting liability. And again, I guess the idea is to make the financial statements more informative. So it was a change, and that was a change that you guys incorporated a couple of years ago. And I think the actual standard wasn't, so you guys early adopted it basically, because the standard I don't think is effective until, if somebody wanted to put it off to the last minute, it wouldn't be until next year for you guys. So you guys were early on that, which, speaks, I guess, highly for the people that are involved in your accounting work, that they didn't want to put off to the end what was coming up and what the new standards were going to be. And then on the liabilities, there aren't a whole lot of liabilities in the big picture. The biggest liability is that offsetting capital lease obligation, and then additionally some notes payable. But the capital lease obligation is obviously the biggest liability number there, which is an offset to the receivable. And then your net position, in the old days, this would have been called net assets, or I guess generically equity, but the invested in capital assets represents the amount of money that you've got invested in your fixed assets. And it would be offset by any debt that you had used to acquire those assets. And in this case, there was no debt related to the fixed assets, so it should equal to the total capital assets, the land and building and equipment and such. And then there's no restricted net position, so the rest of the net position is unrestricted, $7,169,000. Then on what generically might be called the income statement, or a statement of revenue and expenses, your revenues, HUD operating revenues, $2.7 million, tenant rents, $665,000, then other revenue, 146, and that'd be like developer fees and miscellaneous type of things. And then your operating expenses are, I guess, in a way back to normal. I mean, because operating expenses were a little inflated for a year or so with all the COVID money and the additional expenses related to COVID related expenses, and the CARES funding that was received. So this is more in line with what you would probably typically see for your housing authority. And then the interest income, that's on the notes receivable that you have. So that's a little deceptive. I mean, you didn't get $150,000 in cash. It's still owed to you, but it hasn't come in yet. And then the capital contributions represents the HUD capital grant funding under the capital fund program. And then the change in net position basically is your net income for the year, $1.3 million. And part of that is $428,000 from the capital fund grant. And the way that works is the revenue is recorded when you draw the money down, or you have qualifying expenditures, because you really can't draw it down until you have the qualifying expenditures. But those expenditures are fixed asset additions, so there's no offsetting expense immediately. In the future, you'll have depreciation, but in the current year, the impact of this year's draws was an additional $428,000 worth of net income that had no offsetting expenses, but there were offsetting expenditures. So you didn't have $428,000 additional cash related to that revenue because it was spent. Then we come to the statement of cash flows, and I do have to apologize on this because I was looking at this just a little bit ago and I was saying, oh, how did this happen? I think I changed the formula because it doesn't work right. I think you'll, if you scroll down a little further, I can show you what the difference is. See where it says ending cash, $4,662,000. Well, right under that, there's a table that says it's supposed to be 5,106. 5,106 is the correct number. The $445,000 difference has to do with notes payable or receivable. I can't remember now, but I changed the formula somewhere and it messed it up. But I'll get that fixed. But because it was right at one point, but I looked at it and it jumped right out at me today. So, oh man. But this is supposed to tell you or give you an idea how much cash you get from operations versus the other activities that you do during the year. And if you scroll back up just a little bit, it'll show you the cash flows from operating activities, $1,402,000. And that should be, I think that's probably right. I don't think the error impacted that section of the cash flow statement. I think it's one of these other two areas. So the operations, between the rent receipts and the HUD funding for operating activities exceeded your current year expenses related to those items by $1,400,000. But you use some of that money to increase your notes receivable and to increase fixed assets. And yeah, and then a little further down is on the next page, I guess. Well, I guess it didn't print, but there's a second page to the cash flow statement that would tie into that operating, and we'll make sure we get that in, that would tie into the operating cash flow that reconciles the operating income with changes in current liabilities and current assets. The footnotes are pretty much what you've had in the past. There are a couple items that might be highlighted in yellow here where we just want to make sure we get the right information from you guys as to like the number of units there, to make sure that we've got the right numbers to put in there. But the footnotes are pretty much same as last year as far as the content. Yeah, and then right there, it talks about deferred inflows and outflows. And that's, you don't have any. That if you had like a defined pension plan or some kind of defined post-employment benefit plan, that's where generally those type of items would come up. And several years ago, I guess the big brains at the Government Accounting Standards Board said, well, in addition, we'll segregate out some of the stuff that we might call an asset and call it a deferred outflow, and some of the stuff we might otherwise call a liability and call it a deferred inflow. And I guess it makes a lot of theoretical academic sense, but I think for most people, they tend to view it as just either a different category of assets or a different category of liabilities. But anyway, it's kind of here or there with you guys since you don't have any. Yeah, and then these notes are pretty much very similar to what you had in the past. And it's a breakdown of what makes up your capital assets. And as you see, you had additions for buildings, furniture, and vehicles during the year, and $686,000 of depreciation. And this pension plan talks about the defined contribution plan that you have. And then this is a recap of your long-term liabilities, compensated absences, capital lease obligation, notes payable. And then a description of some of your related party activity that's going on. And I think just a little bit lower below here is a summary financial information for the component units. Yeah, maybe a couple footnotes further down. Yeah, here we go. Condensed financial statements for the two component units, the blended component units. Yeah, this is obviously very summarized. All right, and then this is the financial data schedule, which should reconcile to the financial statements at the top of the top level financial statements. This is, if somebody really wanted information on a particular program, on the financial aspects of a particular program, this is where you would go, something like this. It summarizes all the information based on federal program. And the project totals, that's public housing. And then there's a column for CARES Act, and then Section 8 new construction program, business activities, and the blended component units. And then there's a little bit of eliminations for the activities going amongst the various programs, so that when you total them up, you're not doubling up on assets and liabilities. All right, and here's the report under government auditing standards that I talked about before. And this is a report on internal control and compliance at the entity level. And the first thing it talks about the report on internal control. And again, the format of this changed a little bit because of the new auditing standard. Not a whole lot, but some. And it says that we had no items to report regarding internal control as far as material weaknesses or significant deficiencies. And then report on compliance. We had no matters to report at an overall level related to compliance issues with violations of laws or regulations and that kind of thing. And that would be considered the highest level of reporting that we can give under the government auditing standards for internal control and compliance. And then this is the one that's on in accordance with the uniform guidance, or generically you could call it a single audit. What happened is probably back in the 1980s or something. Before that, the federal government, they would send out auditors to audit a program. And if you had a big organization, let's say like the city of New Bern. They might have, 50 different federal programs. So conceivably, they could have 50 different federal audits go on during a year. I mean, the federal government wouldn't do that, but it's possible that they would have several audits that the federal government would conduct on the money that they received. And they came up with this idea, well, we'll create the single audit, whereas all these entities are already getting an audit. We'll delegate their auditors the responsibility for auditing the federal programs. And as long as they comply with the regulations, all the federal agencies should accept the results of that single audit, whether their program was selected or not. And so the idea was really basically to make it easier on the recipients of the federal money and to reduce audit cost. And I guess ultimately it did do both of those things, because instead of having multiple audits, you have one audit for all your federal programs. And so we identify your major federal program. And in this case, it was the public housing, as you can imagine. And we audit for compliance with that program, and we audit the internal controls. And so our report on compliance is that we believe that you complied with the regulations for your major federal program. And that, again, that would be the highest level of report that we can give regarding compliance, and that we had no internal control or material weakness to report related to your major federal programs. And again, that'd be the highest level of reporting we can give regarding under the Single Audit Act. And then this is just a recap of your federal money. As you can see, the public housing accounted for $2 million of your $3.1 million in federal money. So about 2/3 of your federal money was our major program. And under the Uniform Guidance Rules, basically we have to cover at least 40% of your federal dollars, or in this case, since you'll see later on, you're considered a low risk auditee, we only would need to cover 20% of your federal dollars. So we were well over either threshold. We were well over the threshold for how much federal dollars we covered with our work. And it's just some notes that are required to accompany that schedule of federal expenditures. And then this schedule of findings and question cost is required by the Single Audit Act, that we, as the auditors, put in one place. And I think it makes it easier on the federal government when they're reviewing this, that they have all the results of the audit in one place, so they don't have to read through those reports and make sure that they don't miss something. So we have to say, what kind of opinion do we have on the financial statements? An unmodified opinion. Internal control over financial reporting. Were there any material weaknesses? No. Significant deficiencies identified? None reported. And that's technically exactly the way we're supposed to report, none reported. I'm not quite sure why they're so concerned about it being worded that way, but if we just say no when we have our peer review, we would get written up. But because basically, if we had something to report, we would have reported it. So I don't know, in my mind, no and none reported are synonymous, but we need to say none reported. Non-compliance material financial statements, no. And then this rest, everything else on this page has to do with the single audit work. Internal control over major programs. Material weaknesses identified, no. Significant deficiencies identified, none reported. Type of audit reported issued for compliance, an unmodified opinion. Any findings disclosed that are required to be reported? No, because I guess theoretically it's possible to have something that's required to be reported that would not result in that you would not qualify your opinion for. It's pretty rare, but it's conceivable. Identification of the major program, the public and Indian housing, and then the dollar threshold for type A and type B, $750,000. Basically, that's when you go through the mechanics of identifying your major program, you have to identify type A and type B programs. Basically, type A are the larger ones, type B are the smaller ones. And then did you qualify as a low risk auditee? yes. And again, in your case, that would have no real bearing on the amount of work that we would have to do, because to get enough coverage, we would have to audit the public housing program regardless. And either way, we're well over 40% or 20%. So it's good to be a low risk auditee, and it's something that we have to report to them, but it really had no impact on how much work we did. So. And then this just recaps, if there were any findings, they would be reported there. And then I think the next page is probably if there were any findings from the prior year, a follow-up on the status of those. And you had no findings from the prior year. And I guess one thing I'd like to say is, with an audit like this, I mean, yeah, and you think accountants, auditors, they like numbers. We got financial statements, a bunch of numbers. Yeah, we do spend a lot of time auditing the numbers, but probably about half of our work has to do with the single audit portion of the audit. So a lot of it is geared towards program compliance and that kind of thing. And so in my mind, in a situation like this, when we have a clean audit report on the financial statements and clean audit report on the major programs, I think there's a lot of people at the Housing Authority that can be patted on the back and say, good job, you did your job. The auditors were happy. Because like I said, more or less half of our work has to do with program compliance. So.
All right, thank you, Mr. Kitchen. Does anybody have any questions? I think we did good.
Question, good job.
Thank you, thank you.
Good job.
Yeah, and from our standpoint, the only thing left to do is, like I said, clean up this cash flow statement, which I don't understand what I did, but I'll find my error in my formulas and we'll get that fixed. But the next thing is before the end of the month, it's got to be submitted to HUD, which shouldn't be any difficulty. At this point, we've got 11 days, so it shouldn't take anywhere close to that to get the stuff input, especially in this case where most of the work involving the input would be just rolling forward your already unaudited submission with not much in the way of changing to it. So it should be relatively straightforward to get the REACT submission taken care of.
Thank you for your time, Mr. Kirchin.
All right, you're welcome. Yeah, and if later anybody has any questions, feel free to send me an email or give us a call. We'll be glad to try and answer as best we can.
Thank you. Good job.
Amelia, do you have anything you want to add?
No, not right now. I think it all made sense to me. I've got a follow-up question for Alan and Sierra, or am I saying that right? Sierra?
Kiara.
Kiara. Yeah,
Kiara.
sorry.
You are
Oh,
perfectly
thank you.
fine. Don't worry.
Yeah, I'm used to seeing it as it's written. I haven't ever heard anybody say it, but I'll send you guys an email, just about the related to the getting that the audited REACT in. And other than that, though, it all made sense to me, and I appreciate all your hard work. I know emails have been flying back and forth, but I appreciate, all the hard work it took to get that ready.
Yeah. Well, thank you.
All right, thank you all.
Thank you.
All right, bye.
Bye.
Have a good night.
Good night.
Next, we'll have the executive director's report.
Okay. So I just want to share some really good news about our FEMA application. At one point, it was transferred to the Atlanta office, but after about almost 2 months, they sent it back to North Carolina. So we're back to working with the North Carolina team on that. They have been given all of the information for our admin space, which, it is our desire to redevelop the Charles Taylor Center. So they have been sent the scope of work. We're just waiting to hear back from them on what our next steps are. So I'm very hopeful and excited about that, I hope that we could see some kind of finalization on that by the end of the year. That's my true hope for that. And then we have our RFQ out for a co-developer. It's gonna close this week on the 22nd. We actually had an earlier date, but we're extending that so that we could hope to get more proposals because we had the Labor Day holiday coming in and what we had it due. And then we also had a housing conference here in North Carolina during that time too. So that's the reason why we extended it another 2 weeks. Once we get that partner on board, we can start to drill down the scope of work for the actual entire site. And then we'll be able to get that to the FEMA office and hopefully get some movement on that. We're still waiting to close out the MOA between the agency, the city, and North Carolina SHPO. And SHPO had asked us for some more information and we're putting that together now. They wanted some more detailed on what we plan to put back, but I think that we may be able to give them some information up front about what we intend to do without giving too many specific details to get them to sign off on it. I met with our new mayor, Mayor Odom, and he was very supportive in getting that MOA signed, and he's hoping also that we could get them to sign off on it, and then we could circle back on more specific details. So we're trying to get that to them and get a hope that they'll sign off on it so that we can move forward with the environmental assessment that's needed there. The other thing that I wanted to do during this time was just to talk about our annual and 5-year plan. We had a public hearing where we were able to share information on that with the community. Part of the board packet that you receive has that document attached to it. It's pretty much the same as what we had the previous year. We have the 2 phases of development for Trent Court in that plan. And then also our continued capital improvements that we're gonna have there at Trent Court. The specific things that we're trying to do is just to make sure that we maintain that housing for the residents while they are there. Because it is our duty to make sure that that housing conditions are up to standard. And then that is pretty much all I have. If you all had some questions about any of that.
2 questions.
Mhm.
For the Charles Taylor redevelopment, who's the developer on that?
The developer is not, the developer will be the one that we select for the whole entire site. It's
Okay.
just not one specific person.
Okay. And then for the public hearing, did anyone take minutes
We
for
did,
that presentation?
Ms. Meadows is always on top of that. And then it's also recorded word for word. So if you'd like to hear it, then we'll be able to give you the recording.
Oh,
But
meeting.
yeah, we have, she documented all questions, everything everyone asked, and all the answers that we share back.
Perfect.
That meeting, the public hearing, and just to put this out, so get some great understanding. Y'all conducted it, but was there a requirement for the board to hold that meeting? I was reading something and to preside, yeah, it's in the board or similar like.
No, sir, that's not required. I'll let,
Yes, the HUD requires that you have a public hearing on your annual and 5-year plans every year, 5-year plan every 5th year. And the Code of Federal Regulations says that the board of directors or similar body will hold a public hearing. And it talks about the Public Housing Authority having a public hearing. As far as I know, and have been involved in this housing authority and other housing authorities, the public hearing has always been delegated to the executive director to open it and hold it and report back to the board. And that's what happened. And so, you know, in my opinion, should the board be there? No. Could the board be there? Absolutely. There's nothing wrong with the board being there. But you're not required to convene the meeting. So
I guess I got not lost in it, but I was reading something with the planning guide. Is that just a recommendation that that the board preside or that just? I mean, I think you just said it or similar like.
yeah, so the planning guide for public housing authorities, of course, is not the regulation.
Okay,
It's just the guide.
okay,
And I think the housing authority has, you as a board and can certainly delegate that authority to the executive director. And here's why. The public hearing for the annual 5-year plan is not a quasi judicial proceeding. There are no decisions that you make coming out of that meeting. It is an opportunity for the public to comment on the annual 5-year plans. It had been noticed 45 days in advance. And practically speaking, if you were all there, that's fine. If you're not all there, but it is officially opened by the housing authority and the comments are taken, there's no material difference. So.
okay.
And just to share with you, in all of my 20+ years, every public hearing that I've ever attended or held, it's really been no one but staff. Like, this is the first public hearing in my whole entire career where actual community members came. And I know you probably can attest to that, being at the housing authority, nobody ever comes. So being that this is New Bern and the situation that we're in, we anticipated people from the community being there, but I can add this one as a first time to my record. The actual people showed up for the public hearing. So
Yeah, I think
I'm appreciative to the community for that.
that's right. I mean, it's important that the public have an opportunity to
Yes,
review the plan,
absolutely.
comment on the plan.
Yeah, because particularly here in New Bern, because there's just been so many rumors for many years, what's gonna happen to that particular area over there. And so it's good that they had the opportunity to come. It's on the people to come, but that's their choice whether or not they show, but just to help dispel something they can hear directly from, go ahead.
I was just gonna say, that keep in mind that there are different kinds of public comment periods. And
Okay.
public hearings. The annual 5-year plan, as you saw in your packet, has a checklist of things that are always the same.
Right.
Very few things change. What does change, it's updated in the annual plan. And that's what people have an opportunity to look at. It's not at all the kind of public meeting that is meant to discuss
Okay.
really groundbreaking
Right.
decisions or changes. So those will be reserved for other.
Okay. Good deal, thank you. Before you get into the presentation, Tiffany, just one question, not even relative to this. Just, I don't think the other members may know, an update on that mold situation we were talking about, just for FYI.
There was a unit at Carolina Avenue that had some mold in it, and the management is working on getting that taken care of right now. They've sent some reports and they have a company that's going out, but there is a unit out there that does have some mold in it.
Didn't want y'all hearing it in different places and not aware that it was going on, so. Thank you.
And just to say, Mr. Kitchen's comments on a clean audit are substantial. So congratulations to you and your staff.
Thank you.
That's a
Yeah.
big deal.
And real quick, Mr. Monty and Ms. Blackman joined. They joined right at the beginning of the
Oh, thank you. I couldn't see
financial
them.
audit
Okay.
presentation, but yeah, they did join.
All right, Ms. Tiffany.
Ready for Neighbor Towers?
Yes.
All right.
You ready?
Yes, ma'am.
Good afternoon, everybody. I hope everybody's doing well. I'm gonna do the occupancy, part first. Out of 106 units, we have 14 vacancies and we at 87%. I have 5 move-ins and 0 move-outs. The tenant account receivables, I'm gonna go to the monthly unpaid, which is $2,293, and the tower rate is 109%. I'm gonna go to the pending terminations. We had 2 delinquencies over here, and the 2 delinquencies has already been paid out. Okay, we doing it. Okay, and request the work orders, the request received was 45 of them, and 41 was completed. The police report, it was 20 of them, and 1 fire report. Thank you. You have any questions?
I do. Help me understand the move-ins again. Will that make the units occupied 97?
No, that total is already included in.
That's already
Right.
included.
Yeah,
Okay.
that's what she had for that month.
Okay.
It's already in
For
there.
that month.
Okay, thank you.
Thank you.
And just real quick, we have I'm not sure if I mentioned it or not, but our maintenance tech, Mr. Scotty Perry is new there at that property, and he has been doing excellent work. He's getting those work orders done really quickly. He's working on units and getting them ready to rent. So he's been a real asset to the agency, and I'm glad that we have him.
What's his name again?
Scotty Perry.
He was here at the last meeting, correct? Or no?
That was Mr. Grimes.
Okay.
Mr. Perry, he actually works 2 jobs. He works and works and works. So he is working in the afternoon, so he's really not able to be here with us at this time of the evening. One of the days I might get him to swing by if he can.
Okay. That's good news to hear. Okay. All right, for the Supreme Court, Ms. Minor.
How y'all doing this evening? So, we have 15 vacancies with an occupancy rate of 86%. We have 3 move-ins and 2 move-outs. And for our tenant accounts receivable for the month unpaid is $4,208.42 with a tar rate of 84%. We had 23 for non-payment and 1 for other violations. For the work orders, we received 53 and 46 was completed. For the police report was 13 and 0 for the fire report. Any questions?
Any questions for Ms. Minor? No?
Thank you.
Thank you.
All right.
It's the Ross program, Ms. Huggins.
Good afternoon. I have 51 Ross participants. I've enrolled 19 since the last meeting. Case management, same thing as far as developmental, presenting GED enrollment opportunities and reentry educational scholarships. And I've added a feature through Family Matrix, it's Resident Connect. And what it does is it offers text messages, an opportunity for me to send out message a lot quicker than actually going out there to decide if I have something else to do. So it's voicemail and text.
Good.
Okay, and also I'm happy to announce that I have donations from Chick-fil-A and Harris Teeters. And for need assessment checklist for 65 residents, it includes childcare, assisted daily living, which there's approximately 3 of those, and disability is approximately 10. Receiving Social Security and personal care aid is approximately 3. Health and wellness, it's 19 handouts for senior citizens, mental health and substance abuse services. Transportation's 19 handouts. And for home ownership, there's been 2 that are actually open.
And just to share, I think it's really great that she's able to increase her numbers to 51, because just getting the residents out to be a part of the program is tough, and she's been out there walking and walking and walking and increase her numbers. So excellent job.
Can you say more about what it means to be enrolled in your program?
Sure. To be enrolled in the program, the ROS program, it allows the residents an opportunity to become self-sufficient through access to the resources that I provide for them. We go back and forth talking about what goals that they may set for themselves. If they don't really have any goals, and I try to work on what their likes or what their dislikes are, and we just go from there.
So you're actively meeting with 51 members of the community?
I do a lot of conversations on the phone,
Okay,
but I haven't met with every last one of them face to face.
that's a huge caseload, so kudos.
Thank you.
And 50 was the goal for the program, so she's over that by 1.
For the home ownership, what does that mean actively open? Like, what is that process? What is the time frame?
Well, it's not really a time frame. It just depends on what the Habitat for Humanity coordinator requests for them to have. So it's a back and forth process, and whatever she may need for their file to move forward.
Okay,
Then yeah.
I understand.
So they're still open, whatever, like if they have classes or something, or they may have to do something with their credit, so.
I didn't know it's through Habitat.
Yes, ma'am.
Any more questions for Ms. Huggins? You doing it. You said you would.
Working on it.
You said you would. Good job. Good job. At this time, the resolutions.
Hey, the first resolution is for the approval of the audit, the draft audit, to finalize that with those corrections. I think the numbers that he was gonna fix, they were just off, but the bottom line number was correct. He'll make that change. And then also the highlighted areas was mostly like just to fill in the dates of the report and just to confirm our numbers. Otherwise, I think as far as no material findings is the true gem of the report. And so this resolution is just to approve that with those highlighted areas cleared up.
I'll make a motion to accept.
With the corrections, yeah, can you get a second?
I'll second.
All in favor of approving the resolution, the annual audit with the corrections as presented by Mr. Kirchin. You approve by saying aye?
Aye.
All opposed? All opposed, like sign? Okay. The resolution for the annual audit is let's see. It's been approved.
Peace. Muted, Mike.
Man gave a thumbs up.
Yeah.
Next to your annual and 5-year plan.
So the next one is just the approval of the annual and 5-year plan as presented as attached to the resolution. And just to share with you, we're considered to be a qualified agency because we're so small. And really the only thing that we have to do is just hold that public hearing. This document has already been submitted to HUD as of last year. And so me being who I am, want to do it again and want you all to see it again. So that's the only reason why it's here. We just have to send in documentation of the hearing.
I thought it looked familiar.
Yeah, it's exactly. Yeah, so we don't, the only way I'll change it, on our 5th year, we need to add something to it, but for the most part, it's a rolling plan and it's just gonna be the same. Unless we have something throughout the year, we want to change it, then it's a material change and we have to let HUD know.
Yeah, I was reading it this afternoon. I was like, this is like deja vu.
I make a motion that we, or did you have something?
No, that's what we're gonna say. I would ask more.
Okay, I make a motion that we approve the annual and 5-year plan as presented.
Second. All in favor of approving the annual and 5-year plan as presented, please indicate by saying aye.
Aye.
Did y'all say anything? Oh, okay.
Say it loud.
Oh, you say it loud. Yeah.
I know I'm not
Okay,
like
yeah.
this.
All opposed, like sign? Okay. So the annual and 5-year plan has been approved. Do you have anything that we need to?
No, sir.
Okay. Nothing for closed session. All right then, can I get the motion to adjourn the meeting?
Yes. I make a motion
Can I
to
get a
adjourn the meeting.
I say,
so move.
Thank you for your input, Mr. Monty. We really appreciate it.
Put that in the minutes in a second.
Thank you all for your time. Thank you all for coming out this evening. Thank you very much. Thank you. And I'll get to talk with you.
Yes.
God bless you. Thank you all. Meeting adjourned.